It was a pretty wild day in the markets today. But the important thing is we didn't finish down. Very wild though. We were up, we were down, and then we finished back up. So what happened? First things first, Trump got Russia and Saudi Arabia to the table. Apparently they're going to do some oil cuts. Trump kind of just leaked that through one CNBC reporter, and then he leaked it to all of us. Trump hasn't come out and said that. So let's see what Trump has to say about that. Tomorrow he's going to be meeting with 7 oil execs in person, remember, in the midst of coronavirus, in person at the White House. So that could be a pretty big oil meeting. We'll see what comes out of that. But if you're buying purely on oil, you're making a mistake. You got to be buying on more fundamental things than oil. Oil's a mess. Stay away from it. But the real important thing that I led off with was we didn't end up negative. And if you saw my story with what I was telling my clients the other day, after that 100,000 to 240,000 death potential prediction came out, I said, let's see what happens Thursday. Thursday's the crucial day. If we see 3 to 4% moves Wednesday and then see 3 to 4% moves on Thursday, that's a really bad sign. That indicates further sell-off. We saw 3 to 4% moves yesterday, A lot of people probably just saw that headline, freaked out, and didn't watch the whole press conference where they significantly backtracked off that number. So lots of selling yesterday, but is anybody surprised that we saw bad numbers? At the end of the day, not really. Everyone knows that the numbers are going to be bad. We had 6 million jobs lost in a week. Terrible, doubling expectations, and we finished up today. Everyone knows the economy is going to be hit hard. You can't really predict it, and everyone knows that. So we're dealing with what we're getting, and it's ugly, but we've factored in ugly. We've been anticipating ugly. We might have even overreacted to the ugly in this massive sell-off. Maybe it's not so much of an overreaction. Maybe it's rather reasonable considering we were at such good valuations before. But at the end of the day, we finished up and we rallied into the close. We didn't sell off into the close. It's not like people were saying, oh, we're up, now I can get out of my positions. There were people trying to buy and there were people not trying to sell. So market sentiment seems to be somewhat calmer, than it was a couple weeks ago, even though we have been swinging around a solid amount today. But massive announcement came out. Trump brought the Saudis and Putin to the table. So that was a reasonable reason for that early morning jump. And then at the close, people realized, we kind of know everything. And there's nothing crazy is going on, it seems. So we're probably at some sort of bottom. And it might not be the technical bottom. We might end up at a lower price tomorrow, 0.5% down. It's totally expected after a little bit of a rally. And to check that, a little bit of a bounce is totally expected after an aggressive sell-off yesterday. The fact that we didn't have 2 consecutive massive sell-offs is an overall good sign. We don't want to see that. That could indicate really bad sentiment in the market and people freaking out and thinking this is going to go farther. But at the end of the day, we've factored in a whole lot. We know that a whole lot's going to go wrong. But we also know that the markets are forward-looking. We're thinking about the future here, and we're buying long-term assets. The next 2 weeks, while they're 2 very crucial weeks, are not the only 2 weeks that you're going to own a stock if you're buying for the long term, right? If you're buying something like CRISPR, sure, next 2 weeks, it's going to be a pain in the butt. It probably won't be able to raise funds as easily if they needed to. But when you're buying a technology like that, you're buying it for the next several years. And coronavirus is eventually going to be a thing of the past. So long-term assets are still long-term assets despite the short-term volatility. And it seems like the market is remembering that and is starting to calm down because we're not hitting limit down 2 times in a day when we get 6 million jobs lost. We end up. So the fact that we end up is relatively good. It signals to me that we're at some sort of psychological bottom, or hopefully at least, and that should hold. And we should be turning the economy back on April 30th. So one of the things the death rate doesn't have a direct impact on is the April 30th expected economy turn on. We expect to go back to work, to turn the economy back on by or on or around April 30th. So the numbers, very important. The new case count is kind of the number one number I'm looking at right now. But as long as that curve begins to flatten and start slipping downwards before April 30th, not a whole lot's going to change. Obviously that doesn't sound good on a moral level, but we're not rating the morals here. We're rating the market. And it seems like the market and the economy are expected to be turning back on April 30th. Now, obviously not the market is turning back on then, but if the economy turns back on then, that's something for the market to consider. So we'll see what happens tomorrow. Until then, peace.